Hey everyone, me Kevin here. As we go into earnings season, it's worth knowing that there can sometimes be leading data, and this time we're getting leading data from artificial intelligence and, exports that are starting to miss thanks to the United States. Now, this has happened before. We have volatility in some of these numbers, but the magnitude of this miss is something we haven't seen since 2015, and it's somewhat odd because really, there's this large narrative that right now a lot of our GDP is propped up by, government workers, 785,000 of them if you read the last government BLS report. And then, of course, artificial intelligence, which was likely one of the reasons why we're, quite frankly, not in a recession yet. Who knows, maybe we already are, but at least not definitionally. So let's take a look at this report out from Goldman Sachs, which actually comes from the Taiwanese Trade Ministry. If you dive into the numbers, they're definitely a lot more than meets the eye. See, if you look at a Taiwanese news site like Focus Taiwan, you'll actually see a headline, Taiwan exports hit new high in September, driven by strong AI demand. Okay, cool. This is a Taiwanese paper saying, hey, everything's fine, this is great. And if you just read the headline, or frankly, you only read this story, this wouldn't seem like it'd be a big issue. But it's not until you actually dive a little deeper, like this Goldman Sachs research here, that you find that the Taiwanese export numbers were actually way worse than expected. These are actually that these are actually pretty bad numbers. Now, I'm not looking for things to be bearish. I actually really just want to understand what's going on in the macro environment, and I want to understand the trajectory of artificial intelligence because, quite frankly, if we get continued good jobs data here, I want to make sure I'm positioned correctly when I'm buying stocks. And this was very interesting to me. So I wanted to look at this with a skeptical outlook, but look at this. This is not Taiwan Semi, this is Taiwan, the country, though obviously Taiwan Semiconductor, producing 90% of the advanced chips in the world, is basically your exporter coming out of Taiwan, right? So Taiwan, negative surprises in September exports, led by drop in AI-related exports specifically to the United States. Now that's interesting to me because it does make me think of a few things that I go into this with. The first thing I go into this with is I know that Elon is done with his Nashville data center, and it's possible that in part because of that, you have less shipments coming to Elon via his expanded data centers for Tesla or otherwise, or even X and Grok, and potentially that's slowing shipments, but if these are in such high demand, we should continue to see more shipments. So, maybe, who knows, maybe there was a supply chain issue or something. But I do also go into this knowing that Amazon reduced their orders for additional H100 chips. Now, their argument was that they were just waiting for Blackwell, and that's sort of what's being advertised. But I always like to say, look, if the AI demand and the AI profit is so large, even if the margins are slightly less using the H100, I'd rather fulfill the demand. Now, if the demand starts slowing and I actually don't need any more chips right now, and, if I want to future-proof, I'll just get the new chips when they're out, it is a sign somewhat of maybe we have a little too much AI server demand. Mind you, I'm also going into this with the impression that 99% of AI companies will probably go bankrupt. I think they're really high risk. Mostly because, I hate to say it, but I did capitulate. For those of you who want to know, I did capitulate. I did end up getting to 16. One of the reasons I didn't want the 16 is because it was going to take me forever to transfer all the stuff. I have both phones here right now, and it's taking me forever to transfer all these apps because I do it all manually. Otherwise, it just sets up slowly. But sometimes by doing that, I also go through and I see some of these other apps that exist. And I'm looking at this right now. I'm like, well, I have Copilot AI that I can use. The Acrobat AI, PDF reader is actually pretty decent on the phone. Notion's now incorporating AI, though I think they use the GPT engine. Then, of course, you've got GPT. Then you've got Grok. But then beyond that, I know you've got Bing as well. Then I found, this other one, which is, I think, Anthropic's, which is Cloud. That's not Cloud, it's Claude. Whatever. And to me, it's like, my gosh, how many different AI chatbots could I possibly need? You know what I mean? Like, so I do wonder, like, how many of these companies are training chatbots when the market doesn't even need that many chatbots. And when we go down to like an oligopoly of AI servers, basically, are we cutting out the rest? Let me clarify what I mean. And then I want to get into this data because this AI drop is pretty intense. But consider the data for a moment here. If another example of an oligopoly, like what would a good example of an oligopoly? I can't even say the word oligopoly be. I think personally, cell towers. Right now, if you want different cell service, you basically got Verizon, T-Mobile, and AT&T. And then you might say, no, that's not true. I use Mint Mobile or whatever. But then you realize they just use the T-Mobile bands or, whatever. I think the Google Fi ones, I think they use Verizon. I'm not sure. But anyway, you really just have 3 providers here. And so what happens is if you're like, oh, I want to get into, making cell towers, it'd be crazy for you to spend the CapEx to get into cell towers. Like you're better off just doing a Ryan Reynolds and, making a Mint Mobile, creating your own branding to attract customers, and then licensing T-Mobile bands. And so T-Mobile gets more business, and you're picking up people who aren't willing to pay T-Mobile fees. And I think at T-Mobile, you pay maybe $35-$40 a month. You almost get the same thing at Mint for $25 or $15 a month. This sounds like an ad for Mint. I use Mint. I also use T-Mobile. I use both. I think they're great. I use Verizon. I use AT&T. I use all of them. I hate Verizon. Verizon sucks. Although they have better service than AT&T in my area. Anyway, my point is, of course, you're going to have an oligopoly in AI as well. And so I just wonder, is some of this data that we're getting here indicative of this beginning to happen? I don't know. I'm not short any AI. I'm not trying to pump a book here or whatever. I think by now many of you, hopefully my biggest fans or subscribers, I appreciate you so much. Not necessarily the loudest people complaining at me in the comments, but I just want to thank you and appreciate that I want you to always know that I'm just going to give you these facts and the data that I see, even if it's unpopular. Talking down AI right now is extremely unpopular, and I'm going to get a lot of hate for it. I just always like to bring a realistic outlook. I do the same thing in real estate and my other businesses. House Hack's kicking butt. We'll have, I think we've got a big House Hack update coming next Wednesday, so stay tuned. Mark your calendar for that. It's going to be huge. But anyway, Taiwan exports fell 5.1% month over month seasonally adjusted, pulling back from a sharp rebound of 8.2% in the prior month. So you had a really big August, so it's possible this is some normalization. But the outcome was even worse was weaker than our below consensus forecast. So in other words, Goldman had a forecast which was below consensus, and the outcome was even worse than what Goldman Sachs was predicting. Exports fell sharply across most major products, especially AI-related products. This is a big red flag here. This is not good. AI-related products fell 18.6% out of Taiwan. So now this is important to note because when they show you the charts, they don't just specifically show you AI-related. So AI-related products down 18.6% month-over-month seasonally adjusted. I'm just going to write that down as sort of one of the little takeaways here. By destination, U.S. Fell 23.8% month-over-month seasonally adjusted, largest drop since 2015. So those are 2 really important data point takeaways right there so far. So the U.S. getting really hit in reflection of the sharp declines in AI-related exports. The losses were partially offset by gains in Japan, emerging markets, South Korea was mentioned in here. But look at these numbers here. The Bloomberg consensus for September exports was 10.9%. Goldman was at 9.9%, and the previous year over year was 16.8%. Well, you actually got a read of just 4.5%. So the number's still positive. And when you go over to the Taiwanese, news source over here, you'll see they still accurately mention the positive news here on growth. It's true. It's another month of growth. But the problem is not that there's growth or contraction. The problem is actually that growth rate has just collapsed well further than the collapse that was already expected. Bloomberg was expecting roughly 11% right here, down from the 16.8% last year growth rate. Well, now it's just down to 4.5%. This is a shockingly small number here. This is not great. Keep in mind that as part of the exports in information communication AV products AI is lumped into that. So sometimes you'll see charts on exports of IT, comm, and audiovisual equipment stuff. AI is only at one fourth of that, so it's really difficult to sort of look at charts on this kind of stuff. But basically, it's bad, and it reverses about 3 months of modest gains in the AI exports. And sequential momentum, which is quarter to quarter, was also weak for other exports after gains in the previous months, with machinery and commodity-related exports declining 7.8 and 7.1% respectively. By destination, exports to the U.S. plunged 23.8%, sharpest drop since 2015, in a reflection of the sharp declines in AI-related exports. Exports to Europe also declined 12.4% after a strong rebound in the prior month. Again, maybe this is, a way of saying, hey, things are normalizing. We can't always go to the moon. And Ing alluded to that as well. They had a report on this, and they mentioned here that, hey, perhaps this is just a normalization after this really big beat in August. And that's entirely possible. But they say that, they were expecting some of the acceleration of demand in August to translate to September, and so far it didn't look like it had. So I find this interesting, and to me, it is somewhat, it's something I want to pay attention to. Like, I don't want to go as far as calling this concerning yet, but I do think that a lot of our economy is propped up on artificial intelligence CapEx spend, and one of the downsides of that is when you have a jobs report that tells you your household jobs increased by 785,000 jobs, and it was all government workers, and absent the government workers, the unemployment rate would have skyrocketed by 0.4%, which could have potentially triggered us going into recession, on a definitional basis, since it's possible we already are. Well, then all of a sudden I get a little nervous because I really want to be bullish. I want everybody to know that. I think it should be crystal clear. I want to be that person that every single day is just like, buy the dip, let's go, I love this. But in fairness to those of you who watch my channel and those of you who, come to me for information maybe you're not hearing from anywhere else, I have to keep being as transparent as possible with my feelings, and I just don't feel good about where valuations are right now. Now, don't get me wrong, NVIDIA's decent right now, unless obviously growth collapses. NVIDIA's only sitting at a 1.9 peg. It's way cheaper than like a Tesla or Palantir, which have definitely been running. But really, if you have not looked at it yet, please take the time, look at table Alpha 8 on the last BLS labor report, and I really want you to pay attention to this seasonally adjusted number of government workers here. All of a sudden, we're up supposedly 785,000 government workers on a seasonally adjusted household number, which is what the unemployment rate is based on. This seems kooky dooky to me that this could be true. Private payrolls increased by, what do we increase by on private payrolls? We did have an increase in seasonally adjusted household private payrolls, which is good. It was about 133,000, which sounds more appropriate. But you did also then have a decline of over 200,000 in the self-employed workers. So if you're counted as employed as self-employed, and let's say maybe you did get a job, so you counted over here, you actually had a loss of private payrolls there. So really, the way you could see that is you go non-ag right here, and you could go, okay, we're at 159,635 minus out the 785 government workers. You're at 158,850 jobs. Compare that to the prior month of 159,108. You actually lost 258,000 jobs in the in the combined self-employed and private sector. You're minus 258,000. If it wasn't for that big $785,000 or $785,000 boost that we got from government workers, just seasonally adjusted, it already accounts for the, like removing teachers that are just going back to work. If it wasn't for that, be nasty. Add to that the increase we're seeing in the number of people, working multiple jobs, or the number of unemployed 27 weeks or over, which is a number that generally only rises and rose again in the last payrolls report. The September report was up again. I mean, you were almost 100,000. 97,000 more people unemployed 27 weeks or more, which means now they've fallen off the ability to apply for unemployment insurance, and they're just not considered unemployed anymore, which is crazy. As that number goes up, you're often usually in recession, right? So all these things coming together, I don't think they necessarily say everything is going to collapse tomorrow, but without a doubt, they're a warning sign, and they're a sign that I want to pay attention to. Anyway, big video coming next Wednesday. I hope you mark your calendar for it. It's going to be a huge investment video that I'm making, so a huge investment coming next Wednesday, as well as updates on other aspects of businesses, house hack, like a lot of basically news I've got posting on next Wednesday, so I'm excited to talk about that. Anyway, thank you so much for watching. If you want to get 75 free fractional shares by signing up for Webull, which is that platform that I always like to use for trading, make sure you go to metkevin.com/Webull. You can then draw lines just like I do. And you'll get 75 free fractional shares just for signing up. Go to metkevin.com/Webull. That is a paid promotion, along with life insurance. You can get it in as little as 5 minutes by going to metkevin.com/life. metkevin.com/life. You can Apple Pay or Android Pay for it. And folks, we'll see you in the next one. Thanks so much for being here, and we'll see you soon. Goodbye and good luck.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.